Hey everybody, Jim Malone here, coming to you live on Dallas Trading Floor. Tremendous pop on the market today. Moved up very, very strongly. As if you were looking at this show yesterday, that was what I was kind of expecting based on the stochastics on the spider. We took a look at that, and we were in a very, very oversold position, and so definitely we took a major, major move up today, in spite of the fact that the in spite of the fact that it was the highest CPA numbers in 40 years. I mean, inflation is just absolutely raging, but really interesting because sometimes the strongest up trends in the market happen in a downward trending market. We're definitely in a downward trending market. There's no doubt about it. But what we saw there is very interesting because it just shows that this market is a tough one to trade, and basically, um, as you know, I've been pretty much out of the market, relative relative to most stocks. I really only am holding one stock. Let me see if I can put this up here for TikTok. Kind of get the lay of the land here. Yeah, there we go. All right, a little bit small. One of these days I'm going to be able to do a direct feed to TikTok, and I'm hoping for that soon. But just not it's not happening right now. But let's take a look at the overall chart pattern here, and this is, of course, with the S&P 500 in spider, which pretty much is. I think that really shows how the market is basically looking, and so without further ado, let's kind of zoom in on some of that, and there we go. Flip that camera. There we go. Great. Okay. So now you can see kind of what happened today. Very interesting thing that happened on the spider. Of course, we were going down, 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 and then and this is really interesting. And I want to show you this. Basically, is that right there, right where the bottom of consolidation is, that's where it bounced, and it bounced right below 350. So very, very interesting here. Now, are we going to have a dead cat bounce? I do believe we're going to have a dead cat bounce, probably up to here. This is my guess, at the 21-day line. That's probably where we're going to see the bounce. We're pretty close to the 21-day line right now. We're just about a little less than 2% below that 21-day line. So I expect a very short-lived rally here up to probably about 372, 71, 72, maybe as high as 375. This would be on the spider, of course, which is the S&P. This is the largest ETF in the world. It's the S&P weighted index. So this is an interesting one. I do think we're going to see a trend, but I doubt very, very seriously whether or not we're going to move above this trend. So potentially we could possibly see it move up by the end of the week. We could see it move up once again here, and I do think we're likely to see that. But then in the next week, I think we're going to come down again. So my advice, for what that's worth, would be to start closing your positions tomorrow, probably on Friday before the weekend, because I do think that we're going to see we're definitely going to see uh, a um, a downward trend next week. I'm almost positive of it, just based on what's really happening in the market. So that's my view of it, and several other things. Just before we get into the questions here, we just go ahead and repurpose this. There we go. So basically, that's what I'm seeing. I'm seeing probably an update tomorrow, and then starting next week, I think we're going to see some more down days. But at least for right now, we are, we're moving in. We're moving in the right direction. Finally, wanted to show you the one and only stock that I'm currently holding, and that's Exxon Mobil. and it was up today very, very strongly. Now, I probably will be trimming my position on this one just because I do expect some more damage uh, by the in the first part of the week. So I'm probably going to be holding, and maybe I'll hold over the weekend, but I'm still almost all in cash. Just a very, very tough market to trade in general. This kind of shows you my allocation right now in one of my portfolios, and and that basically saying that I'm only holding just a little over 10% in one stock, and that is Exxon. Because I do expect with these CPI numbers, with this inflation numbers, I do expect the the interest rates to go up, and I also expect the price of fuel to go up, especially diesel fuel. And of course, that is what is basically driving the inflation in food and other things like that, because of course they all have to be delivered via trucks, and the trucks, of course, burn diesel fuel, and so that's an issue that we have going forward. So, wanted to show you that. Do have a stock of the day, kind of a high price stock. I'm not in this stock right now. It is AutoZone, and one share will set you back $2,275. It is looking good. Why? Because the with the slowdown in with inflation, many of the commercial companies are going to have to replace a lot of parts, and this is doing very well in the commercial vehicle. So, new car sales, not so much, but definitely very, very good. When you have inflationary times, typically you'll see auto parts stores do very, very well, and I think that's not an exception this time with AZO. Um, um, AutoZone. It's right at a buy point coming out of a cup base, which is a very good is a very good indicator of a move higher. But again, I don't own this stock. The only reason I'm putting it out there is because this stock is probably going to do well as we continue to have inflation towards the end of the year. And I do think that, again, I think we're going to see a pop in the market, obviously. And I was talking about that yesterday before the CPI report. The stochastics on the spider were telling us that. And then we did get that pop. We were up significantly. I mean, we're up 1,300 points today. And that is going to be short lived. I think we're going to have maybe another 1 or 2 days, maybe 3 days at the maximum, and then we're going to be gone. I don't think we're going to get a follow through day. That would take 4 days in order for a change in the market direction. I don't think that is going to likely to be happening. Also, wanted to show you a shot of the VIX. The VIX, of course, is some people call it the fear index. And basically, what happened was we were going up, up, up on that. And as you can see, and I don't know if you can zoom in on this one enough, it's going to be tough. But we definitely pulled back, and the volatility is moving down in the market. So that's telling us at least that we're in this. We've changed direction. We've gone to this dead cat bounce. I don't think it's going to last very long. I'm saying maybe 3 or 4 days. That's what I'm looking at. It's if it's going to be a tough. I don't really see it as that much of a buying opportunity. So I'd be very, very careful on this. But what I do see is that we will have a shorting opportunity probably next week. Uh, we will have a shorting opportunity probably next week, due to the fact that this typically is what happens, is that we get these bounces like this, and then and then it will come back, and hopefully we will have some shorting opportunities. I'm going to be trying to cover some of these shorting opportunities next week. But I do think we're going to have some. I think there's some very good setups out there. One of the ones I think that we're having a good setup on is Walmart. I think this is a shortable stock. I haven't shorted it yet because I've been waiting for this kind of rally. And now that it's rallying, I'm probably, if it moves up higher, I'm probably going to be a short on this. But I think that we're going to see some of these legacy retailers do very poorly because of the inflation. They have big inventory problems, and so there may be some very good money-making opportunities in the very near future with some shorts. So let's get to the questions. Thank you for holding, everybody. So appreciate it always, everybody. All right, so let's look at the comments. There we go. Gosh, I'm trying to get this for TikTok here so that you can see kind of what's going on. By the way, if you want to see this the full every all the screens and everything, just go to www. Just go to youtube.com/Dallas Trading Floor. All right, thank you very much. All right, so okay, yeah, here we go with Roman. Thank you, Roman. Let's look at TROW. Um, let's look at that. TROW, T Row Price. Okay, from beautiful Baltimore, Maryland. Uh, I went to undergraduate school very near there. This was a long time ago. This is back when dinosaurs were still alive on Earth, a long time ago. It's headed downwards, T row. So let's kind of look and see if we can get something here with T row price. Um, it's got a horrible checklist, 35%. I typically try to look for something that's an upward trend to buy. Now, of course, this is not for a short. This is what I'm evaluating. This is for a long, and for a long, I just don't think you can buy this. The pattern recognition on this one, not so good. It's 54% below where its pivot was last. So, and that would be a cup with handles. Just it's not looking good. The checklist is horrible. Is it shortable? Well, I'm not so sure it is. It's just I think you need to avoid this one. As you can see, this is the number of funds that own it. We're having number of funds drop here, so that's not a good sign either. Let's see if we can go over and kind of get a crystal ball on this one to take a look at the fundamentals. We're pretty much looking at technicals here, but let's look at the fundamental indicators on this one, and that will be sales and that kind of thing. So for T row price, we had a nasty decrease in sales, 22% last quarter. Their profits were down 46% quarter over quarter. Not looking good. So that's moving down. Mm, Fairly good cash flow, very strong PE ratio. The question is it low enough to buy it? Well, I don't know. It just doesn't look good. Now, I would say, you know, we might see a bottom on this one at about 81, but we're still at 102. So I just don't think you can buy this one. At least for now, I think you got to be, I think you got to just avoid it. So here's my take on a T row price. I would say don't buy it. It's not looking good. So don't buy T row. That's kind of the that's kind of what I got to say about this. Just don't buy T row price. I think there's other better fish out there that are set up better, and this just one doesn't work, unfortunately. So don't buy T row price. Don't buy T row price. That's my my take on it. So TROW is a no go. Bombadoc, thanks, Bombadoc. Always like hearing from you. ERF, I own this hold or sell. Let's take a look at ERF. Okay, great. Thanks, Bombadoc. ERF and that. Oh, Enterprise. Okay. Calgary. Okay, so this is oil and gas. I do like oil. As you know, I am an oil and gas fan, at least for right now. Yeah, this one's very well set up. I like this. I like this pattern, Bombadoc. I think this is an excellent pattern. It's coming out of this. There's a consolidation, and then there's a cup, and it looks like it's moving higher. So I would say hold this one. Definitely. Let's look at a few things. It's a relatively smaller oil and gas stock based in Calgary, which is a great place, especially in the summer, not so much in the winter. But it is a beautiful, beautiful place. If you've ever been there, it's wonderful, wonderful. Um, so we definitely see a lot of funds in it. That's got 259 for a small oil company. That's pretty good. Very strong checklist. Only falling down really on the EPS rating, looking good basically in general. Now I'm looking at the weekly chart, so we're a little bit above. So it's probably not a good. I don't know if I'd want to add here. Let me look at the daily chart to see if it's addable. I don't know if that's a word or not. I don't think it is. All right, so here we go. Yeah, if we draw a reversal line, let's do that. Boom. Okay, well, it's above that reversal line. So it came right down to the 21-day mark. That's great. It's got a relative strength of 98. That means this is in the top 2% of all stocks currently. So that's looking good. Nice, strong relative strength line moving up. We've got nice accumulation coming in. So yeah, I would say hold this one or possibly even add to your position here. Now I wouldn't add a lot, but I would probably consider adding. Yeah, I like this one enough to say, um, I like this one to say, possible add, and I haven't been saying that a lot. So possible add to if we added to the it added to the we could easily I think we can easily add to this one. Now I wouldn't add a lot. I would be careful. I wouldn't have this as more than one full position in my portfolio. So no more than 12.5% of your overall value of your account I would have in the stock. But I think you can, if you're under that, if you're under one full position, I definitely think you could add here. So very nice stock. And let me put that on the list because I hadn't been looking at that one at all. And I do like these oil and gas stocks, as you know. I still think we're going to have some more inflation, unfortunately. ERF. All right. So so I definitely think that is an ad situation, and that's looking pretty darn good. All right. Well, thank you for that, Bomadoc. Thank you very much. All right. Let's see. We talked to Roman Bomadoc. Okay. Let's look here. Hey Jim, where do you expect the resistance for the QQQ and the spider? Very good question. Wow, that's a fabulous question. So let's take a look at both of these, and let's take a look at the Qs first. I definitely think we're going to have resistance on this upward trend, this dead cat bounce. I can't see how it's likely to go any more. But let's take a look to see where resistance is. You know what? I believe resistance, and I know this is kind of a weaning way, but if we draw the reversal line here, and for everybody on TikTok, let's show that reversal line. There we go. All right, this is that red line that I drew here. That's the reversal line, and it definitely we got this bounce. This is the QQQ, by the way, and we're coming up to this. I do think that we're going to see resistance on the Qs probably at about 275. That's my guess. So I think we have about $7 more to move up on that. I definitely think we're going to see a move up tomorrow, but I think we're going to see resistance at about 275. That's my guess on the Qs. So let's see, put that in there. See if I can put that in there. So resistance on the QQQ at 275. That's sort of where I'm seeing it on my charts, anyways. So that's kind of where I see that's sort of where I see that's sort of where I see it. So if we were to set the alert at 275, uh, that would be that's where I think resistance is going to happen right there at that mark. There we go. So I think that's where you're going to see it. Oops, move this up a tad, just a little bit. There we go. So I don't think we have that much more to go on the upside with the Qs. I think we're likely to see it come up maybe as high as the 21-day line, but I think 275 is where we're going to start moving into some resistance on there. The 21-day line currently is 277.50, so just about 250 above that. So that's where I think we're going to see it. This is where I think we're going to see the resistance, at least on the Qs. Now for the spider, and that's the one I'm really more following right now because the the QQQ index has been very damaged, unfortunately, with this interest rate rise. Because the QQQ has a lot of growth stocks. growth stocks are very, um, susceptible to higher interest rates. Higher interest rates kill technology stocks, and so that's kind of what's happening. There's been a movement, obviously, out into the Dow stocks and also into also into the oil stocks. And I think it's oil stocks really that's going to benefit the most by these high interest rates. So with the spider, and eventually I think that we're going to see the spider bottom at about 320. We're not obviously way away from there. And I know that sounds weird because here's 350 currently, the spider's at 365. Where is it going to where's the resistance? Well, I think the resistance is right here at the 21-day line. Currently, the 21-day line is at 371, so we're pretty close to resistance. I just don't think we're gonna see this bounce, and I really think this is a bounce. What I'm doing here is I'm showing you the stochastics on it, and I wanna show you that the fact that we are very, very much we've bottomed, we are overbought, and we are gonna come we're gonna see definitely a movement up. There's no question. But I think this rally is gonna be very short-lived. Maybe 4, maybe 5 days, maybe 3 days, I'm not sure, but probably tomorrow and Monday, I suspect, and Tuesday, but after that, I think all bets are off. So I think we're gonna come up basically to the 21-day line, which is at, 377. So that's kinda where I see, resistance, on this is kind of where I see resistance on the spider. So we put that in there. SPY is going to be at, I believe, about 377. That's going to be, yeah. So, oops, I didn't quite get that right. Resistance on the spider at 377. So that's kind of where I see it. Um, Okay, so that's sort of where I see the resistance on it is at about 377. That's a great question. Really appreciate that. So basically, I think it's going to be very short-lived dead cat bounce rally. So just be careful. So just be careful here. Also, oil and gas is the place to be. I agree with this, Troy. Thanks, and thanks. I definitely think oil and gas is going to continue to outperform the market. Um, and I just think that's where it's at. I think it's where it's at. It's where it's been at pretty much for the whole year, and that's definitely kind of where it's looking. I'm scared. I'm scared markets will stay flat for 5 years or longer, which sadly is possible. Absolutely, it is possible, but I don't think that's going to happen. What I do think, when you get these really super high inflationary periods like this, the market eventually will break. The market will eventually the market is going to eventually break on this. Okay, and when it does, we're going to get some great opportunities. There is going to be a follow through day, and I do think the market is likely to pull lower. My guess is 320 is approximately on the spider, and then I think when everyone is giving up, I think we're going to get a rally. And um, because there's been a tremendous amount of destruction this year in the market. But I don't think it's going to go for 5 years, and yeah, I think we're going to get some opportunities. So just I know it's tough to be optimistic here. I'm getting more optimistic as the day goes on because the worse the market gets, the more I'm looking at these setups, and especially on some of these stocks, and they're becoming better and better. So I think we just have to wait for that follow through day. And if we get a follow through day, and of course, what the follow through day is, it's 4 days up after a bottom. So 4 days up, we're as close as 4 days to a fall through day. Today was day one of the follow through day. We've got to have four in a row. So I don't expect follow through to succeed, but I definitely think we are going to see at least maybe 1 or 2 or 3 more days of upward. And then if we get a fourth day, and we're up on two or more of the indexes, the Spider or the Nasdaq, then that's a follow through day, and that's when you want to start moving back into the market. Right now, the market is telling us that we need to be mostly in cash, with just a few pilot buys. My pilot buys have pretty much been in oil and gas, and right now I'm going with a really safe one, of course, and that's Exxon Mobil. But there's other ones that are better. They're probably better than that. So don't lose don't lose don't lose faith. Don't lose faith. It always comes back. Tesla popped very last. Yes, you're certainly right about this. Here's the thing about Tesla. Tesla was a fantastic stock in 2020, 2021. It's now a market perform stock. So it really is just going to go with the market right now. There will be a new Tesla. Right now, that's not the place to be in the market. We don't want to be in tech. Tech just is going to underperform. Why? The interest rates make it not as profitable to invest in growth stocks that have high PE ratios. That's just a fact. And because of these high interest rates, we want to be in the stocks that benefit from inflation. The, the stocks that benefit the most from inflation are oil and gas stocks. Now, retail, you have to be careful with too because people are going to be cutting back. They're going to be spending on oil and gas. They're going to be spending on heating. They're going to be spending on diesel. They're going to be spending on all that stuff. What they're not going to spend on is retail. They're going to spend less on housing. So there's going to be less housing starts because, of course, interest rates are higher. So the only sector that's probably going to do well in a high interest rate environment is going to be oil and gas. And that's where we want to be. So when we get a fall through day, that's kind of where we want to look. That's kind of where we want to look. Also, the market is telling us that electric cars are very expensive to own, and the average people are not going to be able to own these. So expect used car prices probably to stabilize or go higher as well, because a lot of people won't be able to afford new cars, at least for right now. So that's kind of a look deal. Apple is strong. Yes, that's interesting. And really that shows the difference between Apple and Tesla. Why is Apple strong? Well, because it has its own ecosystem. That's sort of my viewpoint on it. It does have a lot of sources of income. Now, the problem, of course, with Apple, in my humble opinion, is that Apple it's running out of stuff. People are not buying the um, iPhone 14 as much as much as they did in the future. As you can see, we're following this downward trend. And if you draw a trend line on Apple, you can see we're still in retreat, even though we had a strong movement up today. I wouldn't be a buyer of this one. The trend is not, as they say, the trend is your friend, and with Apple, that's not. It's not looking as good as it was just a while back here. A while back here. So we're in a downward trend on Apple. And we did have a dead cat bounce, and I expect a reversal probably Friday. I suspect probably this will trade down tomorrow. That's my guess for Apple. So be very, very careful with Apple. I wouldn't be a buyer of Apple. Christina is asking about um, Christina is asking about Microsoft. Again, anything that's in the Nasdaq is probably not where you want to be in this market right now, just because um, it doesn't. Um, it's going to suffer somewhat from this downward trend. Here's the chart of Microsoft. Pull that down there. There we go. Here's a chart of Microsoft, and as you can see, it is a terrible, terrible chart. And it's moving lower. It's under 250. Again, if we draw the reversal line, I don't think it's going to come above that. We did have this dead cat bounce, but expect resistance and a movement lower. As stocks move lower, you can see they'll bounce back like that. So that's kind of always the deal there. All right, let's take a few more questions before we're done here. Global shipping company thoughts. Um, I think that we're gonna see I don't think it's gonna be it depends on commodity prices. If commodity prices remain high, I think global shipping will be good. Uh, that's sort of my that's sort of my take on it right now. The question about shipping, let's look at the bellwether one. Let's look at Zim shipping right here. and see how they fared today. I think we got a little bit of a bounce. Yeah, we got a little bit of a bounce, but we're still in a downward trend. We've been sort of in this downward trend since mid-July. So I don't know if shipping companies are the place to be. Even yeah, as you can see, it's fallen. Transportation ship 172 out of 197. So let's look to see where the strength in the market is. And I think if we look at that, now by the way, you can I did post the I did post the I did post the heat map, and you can get that by going to www Dallas Trading Floor and just clicking on it, and you'll be able to get that heat map there. But let's look at the strong at the strength at the group ranks here. Yeah. So the number one group, I believe, is Royalty Trust. Well, that's Oil and Gas Royalty Trust. Yeah, Oil and Gas Royalty Trust. That's the number one group right now in the market. There we go. Pull it down there. Yeah, there we go. So number one group in the market, Oil and Gas Royalty Trust. There's 14 stocks in there, and I suspect Texas Pacific Land (TPL) is the number one. We could take a look at that, but I don't think we really need to. Energy solar has been holding up extremely well. I'd be careful with energy solar though, because it's very dependent on tax credits. Oil and gas, medical, biomed, and tech. So this is another area that has come up, biomed, and there is a way to play that. There's a thing called the BIB, which is a ETF that covers that's a good way to play that. Bank Southeast, I don't know why that's always doing, but it's basically, if you look at it, it's primarily oil and gas. There are some interesting ones here. Shoes are doing well, which is very interesting. And but it's oil and gas primarily, and then a little bit in the biotech. So um, that's kind of the take. That's kind of the take on it for areas of strength. All right. So let's go back and get some of the last questions here. We got a lot of comments. Hey, Jim. Uh, which energy company do you prefer, VLO or? Great question. VLO or LNG? Now, I was stopped out of LNG. I still really like the story with LNG. This is the liquefied natural gas company, um, uh, and I definitely like it. So let's take a look at the LNG chart. And unfortunately, I was stopped out of this one. It's always I'm probably setting my stops too tight. I'm just really careful. Yeah, see, look at how that just came up tremendously today. But let's compare that to um, let let's compare that stock to VLO. So I'm going to go over here and see if we can. Where is that? Where is that? Okay, not letting me. Um, I'm looking for my little comparison chart here thing. So hopefully that will show its. All right. So maybe. Where is it? Markup tool. All right. I'm not seeing it, unfortunately. No. Okay. Well, unfortunately, I can't compare them. I can't, that's maybe that's. Let's go back to. I'm going to relaunch the chart. See if it'll let me do it. All right. There we go. Okay. So it wasn't cooperating. So let's go to LNG and let's look at VLO. There we go. Okay, so this is the chart here for the comparison, and if we look at it, LNG is outperforming VLO. There's no question about it. But they're very similar. The charts are very, very similar. So in this case, in this case, I think you're better off with LNG. Um, I I think you're definitely better off with LNG. So LNG is outperf is slightly. So I think what you can see here for your question is that it's basically slightly outperforming, slightly. And oh, it's interesting. Great, thank you for this. Got two upgrades. Yeah, and price target. I think you're right. I think VLO, especially in the long in the this may be uh, this may be viable tomorrow night. Now expect this one to move higher now that we have these inflation numbers. I think it's very, very likely that we're going to see. Um, it's very, very likely LNG is going to be the better of the two. They're both good. I mean, I'm not. But if we exceed 178, and again, it's a 200 to 200 and 20 report here. That's really interesting. And it got upgrades. I'm not surprised at this. This is going to move tomorrow. I suspect this is gonna move up, probably I don't know, it's gonna be tough to buy this one tomorrow. The thing about buying this one is that it's eventually gonna pull back a little bit, but, we're seeing some strong volume coming in here. This is really what I'm looking at here, just a tremendous amount of volume. If you look at the last, I would say 10 days here, almost all of these bars are blue. That means they're all up volume. We're seeing a lot of the institutional money come in here to this one LNG. So LNG is going to move higher, and I'm going to try to hopefully have a better take on how to buy that one. So yeah. And VLO, yeah, here we go. And VLO to 147. VLO is also excellent. They're pretty much in the same area. It's just it's trying to pick the winners. And I always like to be in, either the first or Valero is a bigger company. Yeah, there we go. Yeah, Valero is definitely a bigger company, and I do like it because it's integrated. I mean, again, I don't think you're gonna go wrong with Valero. So I'm not saying that I'm saying that, LNG is a little bit better play right now just because they're more volatile because they're only in liquefied natural gas. Valero, on the other hand, is an integrated refiner and has a strong, relative strength. So I definitely like this one too. Um, absolutely, absolutely like it. Strong checklist 78. And on the technicals, I mean, it's all there. I mean, basically, we're a little bit above that 21-day line. If you're gonna do a new buy, I suspect that VLO is a better new buy um, than LNG because it's not quite as extended above the 21-day line. So, but they're both excellent, and thank you very much for bringing both of those up. Really, really good stuff. All right, we're getting almost to the end. Did the Saudis say they're cutting oil production? Yes, they are. The Saudis are cutting oil production. That's going to mean you're going to have the big integrateds like they're going to do well in a situation like that because they have supply. But yeah, they are. So, without further ado, thank you everybody for taking a look at the show today. It kind of went a little bit longer than normal. But again, thanks so much always. Please, if you can, it's I'm trying to get out to more and more people, because I think I had a fairly good call on the market before the inflation report, and of course I was calling for a pop today, and it did happen. So not that maybe I'm patting myself on the back a little bit, but I'd like to get this out to more people because I think there's a lot of retail investors out there that are being fooled by some of the CNBCs of the world and stuff like that, and I would like to. And not that my analysis is necessarily better than anyone else's. It's just that I totally follow the charts, and I try to take as much emotion out of it as possible. So, if you could help me And if you could help me get out there with, first of all, if you can like the show, that would be really helpful. It really helps us. Also, if you're looking at the, um, if you're please subscribe if you haven't already subscribed to the YouTube channel. That would be great. That really helps us as well. It helps us, a little bit of money here. And so please like the show. Please, and it's easy to sign up for our email. It's free. Just go to www.dallas trading floor and do that, and you'll be on the list. And again, we also have a paid Discord room as well. That we analyze trades during throughout the day. So that's another thing to go for there too. But please like the show and subscribe. I'll be back tomorrow. Thanks again, everybody. Always a So so please like the show, and we will be back tomorrow at 5, approximately 5, on um, Dallas trading floor. So happy trading, everybody.